Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, well, I was on vacation last week. I was still watching the markets. You had to with all this craziness going on, but I am back now, back at the desk, and looking forward to getting back to doing these every morning. So let's see where we are. S&P 500 E-mini futures daily chart, and what you saw last week was interaction with the 200-day exponential moving average all 5 days, right here. 1, 2, 3, 4, 5. We haven't had this many opportunities for the bears to take out the market and flip the trend on a longer term basis than we saw last week. The area that the bulls struggled to get over the top of all week, though, was the monthly pivot, 2074.50. It offered a lot of really nice short opportunities. And we ended up basically in kind of a range trade between the 34 to 36 area on the downside and, anywhere from 74 to 78 on the upside, which made for a fantastic trading week. I mean, you see the size of these daily candles. What we are seeing tonight, we saw your typical Sunday night dip buy, which has happened for the last 3 weeks. Sunday nights have been excellent opportunities to buy the market. The news, which is still driving the bus, headlines are driving the bus, is suggesting there's a potential deal in the works. Whether that's true or not, it's not really, it's not for us to say. That pushed us even higher than I was looking. So right now, I still have a runner that is long from the 54 area. I'm going to let that work a little bit longer, but I will tell you right now, if we can't get back over 87.5 in the regular session fairly quickly, I'm probably going to go ahead and just take my profits and move on. I've already taken a lot of profits. I've got a little bit left, but this is a two-sided market where the bulls are having their moments, the bears are having their moments, and as traders, you need to take your position, take your profits when you can, and go ahead and book it and look for the next opportunity, because in a market like this, there's always another opportunity that's coming along. What you can't do is be ideological. You can't come in and say, well, we should go down because of X. Probably some amateur economic analysis that we as traders like to put together as an intellectual exercise. And those intellectual exercises are just murder for your trading. One has absolutely nothing to do with the other. So you come in and you say, well, we should be going down. I just don't, this grease thing, my analysis is telling me we should go down. And what you'll do is you'll get short, either when you should not get short, in which case you'll get run over. Lots of opportunities to get run over last week. Or you'll be right, but you won't take any profits because you're looking for even more from a market that's already giving you a ton of handles. We have had 30, 40 handle daily ranges. Take what the market is giving you. It's more than enough. But you can't walk in and say we're going up today. We're going down today. Today should be X. Today should be Y. That's not a trading plan. That's an ideology. That's no good. Trading is a set of either or circumstances. So this morning, either we're going to break above the 50-day exponential moving average there, and the 80, 85 half area, or it's going to continue to be resistance. If we break above, I want to let my long work. If we fail in that area, then that's an area where I'd be looking to get short. I mean, and it flows from there. The monthly pivot remains down at 74 half. That's going to be a big deal on a pullback. If we pull back to that area and it holds in the regular session, either it will or it won't. If it does, that's an area where I would want to add to my long. If it fails, that's probably going to get me out of the rest of my long. I will take my 20 handles and go home, and look for another opportunity. You still have, that's the monthly pivot at 74 half. The area that got moved above last night and tested is our weekly pivot in the 60 half area. Okay, if the bulls lose the weekly pivot, then I would fully expect a move back down to 52 and potentially a move back down to test the 200-day exponential moving average again. And if you don't think we can do it because we're trading 82.75, I would simply point out the last 5 daily candles where it didn't look like we could test it either, and that's exactly what we did. Okay? So stay on your toes, control your size, control your risks. Don't be an ideologue. Take your money when you can, and benefit from really a fantastic trader's market. All right. Everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.